Well, it's that time of year again when everybody's giving their forecast. Well, over the next week, I'm going to have my forecast on what I think home prices are going to do and also what I think mortgage rates are going to do. So stay tuned for that. But if you come here each day trying to figure out what's going on with rates, folks, what we're going to come out today is we're going to recap what happened in 2025. So yeah, what happened to home prices? Where did interest rates? Where did even Bitcoin go? So in today's video, we're going to recap what happened in 2025 to all this stuff, the whys behind it. But if you're watching this video, you might be a homeowner trying to refinance with those rates over there, or maybe you're a home buyer watching rates, trying to figure out each day what the heck's going on with those and why? So today or this week, there's really nothing going on. There's no news. These things, I don't expect these to really move at all. So I thought this week I would take my time and use it to recast where we were and what we did in 2025. And then the latter part of this week, I'll give you all my forecasts for the 2026 year. So let's get over to this. Here's the first thing I want to go over. These are the data points I want to go over with you real quick. But if you're new to my channel or if you've been following me and you're like, Dan, sometimes you're right, sometimes you're wrong. Well, go over to this. Just do me a favor. Stop what you're doing. Pause the video, go and just Google search me and put in housing crash. Okay, this is what everybody's been predicting. And I came out back in January 3rd of 2025 and gave you my thoughts. And I came out in February, I gave you my thoughts. And I came out in May and gave you my thoughts. I keep coming out with housing. And nowhere in there did I mention a housing crash other than just kind of sarcasm in these things. So let's get over with today where these things went and the whys behind it, and then I'll give you a market recap, what I'm thinking rates are going to do this week. Not too much with the holiday week this week as well, where the markets are going to go, like the Dow Jones, the S&P, they keep hitting record highs. And then what my thoughts are if you should lock or float. Sorry, I couldn't do that with a straight face. So without further ado, folks, let's get to today's news. If you're watching this video and trying to figure out who I am, I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. So if you're out there trying to get a mortgage to refinance or maybe buy, check out my information at the end of this video. It's pretty cool because we have a slogan: one application, one credit pool. We're going to compare your loan with over 30 different lenders. Yes, how, why? I'll explain that at the end. Let's get to these things over here. So I wanted to go through here and show you guys what happened with prices of things in 2025. So I took the data points of December 26th of 2024, and then I took it on December 26th of 2025. And folks, here are the results. I didn't mess with it. You can Google search, you can analyze this, do whatever you want, and put any findings down below. But here's that daunting thing right through here. What did house prices do? Did it turn negative for the first time? Even after watching my sarcastic video, were you saying yes? Well, no. Unfortunately, home prices, the average median home price in 2024 on December 26th was $404,000. Today is $416,000 for a gain of 3.1%. I was wrong there because I said the market would be completely flat. So my apologies. Now let's get to where I was talking about where I said rates would be. I said rates in this quarter would be between 5.99 and 6.25, and we're there right there. So 30-year fixed rate last year, you realize last year rates were 1% higher at this time? Look at that, 7%. Now it's 6%. So the affordability on the rates are still there. Where is housing unaffordable? Well, that's where my video is going to come in and really play a key role on where housing is affordable. That's where you're going to see housing prices increase, if anything. So let's get to the 10-year Treasury. This is what basically mortgage rates and a lot of other indices trade off of. You have the 10-year Treasury last year at 4.58. We had a couple rate cuts by the Fed driving down, and they don't do this, but it drove down the U.S. Treasury, 10-year Treasury to 4.14 for a decrease of almost 10%. Okay, so now let's get to the indices. These are what we watch each day. So if you have money, and I keep telling you, put a little bit of money in these things. Don't put in a checking account or a savings account. You know, if you're really, you think the markets are going to crash, at least put it in a CD or something. But here's what the market's doing. So this is how the rich are getting richer. If you put money in the S&P 500, the last two previous years, it was up 25% respectively each year. Would it do this year? 14%. If you put money in the Dow, you're up 12%. In the NASDAQ, 17%. Bitcoin's the only loser on this chart, down 9%. And this thing is so volatile. That's why I keep telling people, only invest in Bitcoin if you have money to lose, I guess is the best way to put it. Then spot gold, the winner for the year, it was at $2,600 an ounce back in 2024. It is $4,500 an ounce right now, and I think silver is following that as well. So that's what we're seeing across the board. So nowhere in there did I see a spike. Nowhere in there did I see a crash, other than the spike in gold. But other than that, the markets were all positive. So my forecasts are kind of going to be like this. It's going to be a mockery of this. I don't think the Dow Jones and the S&P is still going to be as lucrative as they are. I still think you're going to make money in all those. But our concern here is where mortgage rates are going and the whys behind it. So let's get over. I want you guys to understand where mortgage rates come from. It doesn't come from the Fed. Did you know the Federal Reserve does not control mortgage rates? Who controls mortgage rates? Right up through here. So if you don't have the access to this bond up through here, it says the MBS. What the MBS means is a mortgage bond. Okay, so how this reads over here, if the price of the bond's going up, that's good news. Price of the bond goes up, that means rates or yields are coming down. It's a mortgage bond, so it's going to come down. So if the price goes down, rates are going to go up. So that's how this works. If you don't have access to this, well, then watch the 10-year Treasury. But if you're a homeowner, you haven't refinanced yet, you're still at a rate at 7% or even in the high sixes where rates are down almost in the fives now, what should you do? If you're a homeowner, let's go to my website. We'll get back to the bond market here in a second. If you're a homeowner, we created RateWatch 2.0 right up through there. I track it. So what we're doing over here is what I want you to do is put in your mortgage information. What I'll do is I'll track rates. Let me know what interest rate you'd be interested in refinancing. I'll call you, text you, email you. If it works out, we'll get you locked in and we'll get the paperwork started. If not, call you back when rates get a little bit lower. But let's go back to the bond market. So again, how you understand this, if the bond price goes up, rates are coming down. That's all you have to understand. The same thing on the 10-year Treasury. If you see yields coming down, well, that means probably most likely mortgage rates will be coming down as well. So let's see what the markets are doing right now. They're really nothing. I don't think this week is really going to amount to much of anything unless we have a tweet or just something out of the ordinary. So I'm going to say the markets are just going to kind of tread water. The NASDAQ's jumping a little bit. We got oil up, but it's still below $60 a barrel. I track oil because this is huge when it comes to inflation. So now let's get over to FedWatch. What's the Federal Reserve most likely going to do when they meet in 30 days? Well, the most likely thing is there's about an 80% chance they're going to keep rates exactly where they are today. So really nothing happening in the market with news. There's really nothing happening to the Fed. Doesn't even look like mortgage rates are going to change or interest rates change at all. So maybe now you understand a little bit more about what happened in 2025 and why. So were you expecting a housing crash and missed it? I don't think there was going to be a crash. So go back even in my 2024 and even my 2023 forecasts. Give me a grade. Let me know how you think I did. So let's get over to those that are looking to maybe buy in the spring or maybe looking to build at the latter part of this year. What should you do? I couldn't find my lock or float charts, so let me give it to you now. Lock or float. So my expectations are, folks, let's get back over to mortgage rates. Rates aren't going to change at all. So if you're closing within the next 30 days, lock them in. If you're not going to close within 30 days, just float. And I can explain it to you. You can reach out to us because your best rate comes on a 30-day lock or less. Infused with all this, go to my rate update. This is my website. If you're looking to build, buy, reach out to us. I've already explained to those homeowners what you guys need to do over there. So if you're looking to buy in 2026, reach out to us. Here's what we do. We have that slogan, one application, one credit pool. We're going to compare your loan to over 30 different lenders. How? Well, the bank I work at blesses me with licensing all over the country as well as Puerto Rico. What they also did is this. When people call in, what are they looking for? What are you looking for? Well, you're looking for the lowest rate, low fees. So you apply here, apply there. Realize everybody's pulling your credit, all this stuff. What if you can do all that with one? Here's what we did. My bank's set up with over 30 banks, lenders, credit unions. Why? It's for you guys. So you don't have to shop around. We'll do that for you. Okay, so by putting in your application here, that's what we do. So I really don't want you putting in your application. What we like you to do is give us a call, schedule an appointment, ask Dan right through there. Just shoots me an email. We'll respond probably in a video or a call. And then after you know a little bit more about us and we know a little bit more about you, we can go to the next step. So that's what we're looking at for today, folks. So if you want to learn more about these things over here, please join me, subscribe over there. So every day I come out and post a video to you on what the heck's going on with these and the whys behind it. Thanks for watching, folks. God bless. And I'll be back here at the closing bell to wrap all this up. And then tomorrow we're going to have one forecast out that's going to give you our housing forecast. So it will be blasted all over the place. So that will be our official forecast for housing in 2026. So that will be out tomorrow. That's our breaking news for the day. Otherwise, please subscribe down there. So every time I post a video, you get an alert. So maybe now you understand a little more about what the heck's going on with those and why. See you tomorrow, folks. See you later, folks. Bye-bye.